Welcome to the REI Foundation podcast, where we cover all the steps and strategies to make your real estate dreams a reality. Now your hosts, Jason and Peely.
So Fund That Flip, you've heard of them before. We had the founder, Matt Rodak, back in the show of episode 139, and some exciting news happening over at Fund That Flip. They now have funding for your 2, 3, and 4 family rentals. So if you're looking for fast, reliable, easy to work with funding for all of your real estate needs, and now for 2, 3, and 4 family rentals, where can we find them?
You can find them at fundthatflip.com/the REI Foundation. Again, that was fundthatflip.com/the REI Foundation.
Happy Monday, everyone. Today we're talking about market selection. And a lot of conversation is happening that you don't know where to start to invest. You can't find where you want to invest. And of course, the easiest solution is invest in your backyard. And it can seem comforting to say, oh, I can't find any deals here, so I'm going to go halfway across the country and look for deals. But if you actually put the time in, you can find great deals in your area. Trust me, doesn't matter where you are. I was recently at an event, and it was pretty funny that the people in New York were saying the people in California were so lucky because they had all the good deals. Why the people in California were saying New York had all the good deals. And then there was people in Texas saying, well, Texas was overheating, so they were looking in Oklahoma. And then the people in Oklahoma were looking in Texas. So you just can never be satisfied if you don't choose to be satisfied. However, if you are going to select a market out of your general area, here are a few points or a few ideas to point you in the right direction. And we start with the high-level approach. It comes down to just looking at data, and the data can be available from all types of areas and all different platforms, from the Census Bureau to going to county records and state records and local records to sites like City Data can give you all of this data. And what we look for is we're looking for areas that have population growth. We want to see that, of course, more people are moving to the area than less people that are moving to the area. For us personally, we want to look at MSAs that have over 250,000 people in them. We want to make sure that when we have apartment complexes, there's actually enough people to fill those complexes, and we're not going to be in a town of 3,000 or 4,000 where our 100-unit apartment complex makes up a big chunk of the available property for someone to live. Past that, we're looking at jobs. We are looking at jobs and job diversity, what kind of jobs are available, and how much of a particular sector makes up the job market. We don't want to be in a steel town where the steel town goes out of business and everything in the town takes a big hit. So for us, we want to make sure that one sector doesn't make up more than 20% of the available jobs or workforce there. Another point we look for is new construction. And this really comes down to submarkets in a certain area. So if you're in a city, we're going to look at the submarkets, and we want to look at the available units within a certain submarket, especially for the type of assets that we're looking for. So if we're looking for C assets, we want to see how many available properties they are and how many units are within that submarket. However, we do want to take a look at new construction. And you can go to really the cities to see permitting, to see what's actually going to be coming online. Because if a ton of building is happening, at some point there's going to be too many places for people to live, and then everybody's going to have to take a cut as property owners because you're going to be giving concessions. And I was reading Sam Zell's book, and he was saying that it's always funny because when there's a ton of available money out there, people just start building, and they continue to build and build and build without actually looking at, well, how many houses do we need for this certain area? How many places to live do we need for this certain area? And that's where we get in trouble. We overbuild, And then on that fact, there's too many places to live. And then as a property owner, we all get crunched because Class A sees it first. That pushes down to Class B and on and on and on. So take a look at how many units are coming online in the next 6, 12, 18, 24 months, because this is how long you're going to have your property in your area, and you want to see what else is going to be affecting you. Lastly, you want to be looking at your boots on the grounds. Who do you know and how can they be useful to you if you are investing out of your market? And this can be as simple as having friends and family in an area that can run by properties to give you an idea or a context of the area, to building out teams of property managers, of inspectors, of contractors, of brokers, of cost segregation people, to lawyers, where you're going to have to fill out this entire team. So when you do find a property and you're 1,000 miles away, you can take immediate action. So these are just a few of the high level things that you can look at when searching for a market. But again, you can throw all this out the window and you can start tomorrow and just start in your town, start in your area, and find the submarkets that really fill the gaps for the type of properties you're looking at. Trust me, every area that you are has opportunity. You just have to look for it. Again, this is Jason from the Real Estate Investing Foundation podcast. Happy Multifamily Monday. Have a great week. We'll see you on Wednesday with a great interview from a man who did just this, build up his portfolio of small to medium multifamily properties right in his backyard in New Jersey and New York. All right, talk to you then.
Thanks for tuning into the REI Foundation podcast. Check back next time for more awesome tips and strategies to launch your new you in real estate.